All right, so today I want to share with you a story of an unfortunate story of a homeowner that lost their home after closing, meaning after they found a home, they put in an offer, they went to settlement, and they paid cash to close, they got keys and everything, and then all of a sudden they lost the loan for the home and they lost a home. And so I want to share with you a lesson of what not to do. Okay. And so, because it's going to help you understand how seriously lenders are taking it in terms of risk mitigation, meaning trying to avoid the risk to lend money out. And when certain things occur, because of the fact that the mortgage, right, is theirs. The money that you are using to borrow to buy that home is actually the lender's. And so when you purchase a home using a mortgage, it's, yes, the title is under your name, but then the home, the money that's used is the lender's money. And so there's some backup resources. If you don't make a mortgage payment and you go on default, then, you foreclose and bankrupt and all that stuff, and you do lose a home. But there are also certain situations when it's not a bankruptcy, when it's not a foreclosure, and maybe it's innocent, maybe it's purposeful, but I'm going to share with you the story that happened. So what happened was, it was actually a few years ago, and thankfully we don't have, honestly, many of these situations. I think this was the only one in the 500 of loans that we've done, right, and counting. And what happened with this purchase was it was perfectly fine. We verified income, we verified assets. Obviously, they had plenty of assets for the down payment and the closing costs, had excellent credit. I mean, high 700s, excellent credit. And, it went smoothly. I mean, I'm talking about 15-day clear to close, and we were just waiting for the typical thing, right? The appraisal to be completed, the title to be completed, and the seller typically in our situation with our buying clients, we're always waiting for the seller to move out of the house because we move so quickly. But, we went through the whole motion and went to settlement and, clear to close everything and settled, the borrower signed the paperwork, the buyer signed the paperwork, got the keys. And then a few weeks later, we get a letter and the buyer gets a letter. And the letter basically says that the loan is canceled. I mean, it was a shock because we don't, again, 1 in 500 and counting, right? We don't see this. And what happened was the buyer, without telling us, quit her job 2 weeks or a week before settlement. That's right. Now, the buyer had a job lined up a week after closing, but there was a gap. There was a gap from her employment during the mortgage process to settlement and then after. So the buyer was unemployed for a week or two before settlement and then started their new job a week after. Now, this is a huge issue. I know to us, it's a fluid thing, right? Especially in today's job market in 2025 and the job market that's been in 2024. It's a fluid thing where, we sometimes, to not our own, we either lose a job, unfortunately, and then we're trying to look for a new one. But in this case, this person didn't enjoy their job and they left this job and moved on to a new job without telling us because they thought, well, I'm still making income. This should be perfectly fine. The problem is during an underwriting process, again, the underwriting process for lending out money is all about risk mitigation and risk assessment. That's what underwriting is. And so they're trying to understand, what is your risk profile? What is the buyer's risk profile? And one of the ways to show you are a strong candidate to have money lent to you is to be employed, to have income. I know it's obvious, but that's true. And during that process, from you starting the loan application all the way to closing, you have to be employed. You have to be employed. Now, if you wait, like if this buyer waited and switched jobs after they settled on the home, this would have not been an issue. We had another situation where, thankfully, this time around, the buyer did ask us, hey, I'm thinking about leaving this job. I'm really unhappy. What should I be doing? And they asked and advised us because they wanted to make sure nothing was impeding or making it difficult for the loan to close. And so we strongly advised them. And I just gently, in a very uncle way, said, look, you got to suck it up. It's only a few more weeks. Once you close, you can find a job. It doesn't matter. But until we close, you got to stick with it. Because if you care about being a homeowner and buying this house, you're going to have to suck it up and stick with it and just, bear with it for a few more weeks, and then you can leave. I completely understand. I've been there where I had terrible, terrible employers. But just, you got to stick with it. And then afterwards you can go look for a new job. And so that's what they did. And they perfectly closed on the home, and they're happy homeowners, and they have basically the home of their dreams as a starting family. And so I want to leave you with, there are many other things that you should be avoiding, but the number one thing is don't leave your job while you're employed, especially if you're trying to buy a home and you're trying to get approved and everything, because you have all these moving costs in this case. And if you are thinking about it, at least communicate with your lender, with your loan officer, that you are planning to leave, so you can have a strategy in place, a plan of action of what to do, when to do. Okay, there are a few other things that I'll post other videos about, also some other things and stories. If you guys like that, comment below if you want to hear more real life stories and lessons you can learn from mistakes that other people made, and mistakes to avoid, basically, right? And comment below on that. But there are other things that you should not do during the mortgage process, while it's going through underwriting, while you're just waiting for all this paperwork to be completed, and before you get the keys to your house. Because conditional approval doesn't mean you are approved. Conditional approval means you are approved with the condition you satisfy a few things. And even if you get clear to close, you're not approved until you sign your name on the contract, and then you satisfy and agree that you've done certain things. Right? One of them being not withholding information. And it's clear during the settlement disclosure paperwork, it asks the buyer, did you withhold information, specifically around assets, employment, and yada, yada. And they signed it saying, yeah, I did not withhold, when in fact they did. And unfortunately, the buyer lost their home because it had to be turned around, which is really unfortunate because, you're spending money moving and all this stuff. So the lesson is, don't leave your job while you're going through a home buying process, especially if you're in the middle of being conditional approved and trying to get clear to close and settle and stuff. And if you are planning, communicate with your loan officer, please. All right. Hope this was helpful. Link in the description below for a free home buyer's guide, onerate.com/free-guide-24. If there's anything else I can answer or help you with, comment below as well. All right. Thanks. Have a blessed day.